Hello and welcome. You're watching your favorite show Markets at Noon with me Ankur Mishra and Kavita Thapalyal. While markets are little lackluster today, Kavita, not momentum from any side other than FMCG, all other sectors are the laggards.
Absolutely. So the market is trading lower today. Also, the investor sentiment has turned slightly cautious following the ambiguous signals that we are getting from the US officials regarding delay in the proposed tariff hikes. And also crude has played an impact over here where the prices have edged low with OPEC Plus increasing their output, which is more than anticipated. Now that has already added to market jitters. But also, as Ankur also highlighted, in terms of sectors, we are seeing Nifty IT, metal and media indices are under pressure. But then FMCG pack is definitely in action. Also a boost that we got from the Q1 estimate update. And PSU Bank pack, this is really doing well today. We'll be discussing more on this on the show ahead. But then consumer durables, oil and gas sector also rose up to almost 0.5%, 1 to 0.5%. But if we look at the top losers for the day so far, defense pack is really not doing good. We've seen counters going down to 6%, BEL. But also, if we look at other sectors, counters like Tech Mahindra, HCL Tech, Eicher Motors, Maruti, these are the top losers so far in the early trade. But in contrast, if we look at Trent, Asian Paints, Bajaj, Finserv, Reliance Industries, HDFC Bank, they have opened on a positive note. But then since I was talking about the defense pack, look at Paras Defense, Bharat Dynamics, Garden Reach, Bharat Forge. We are looking at almost 2.5 to 6% downturn in today's trade. And also the broader markets are not really participating. If we look at the Nifty Midcap 100, it is in a negative territory, 1%, 0.2% downturn. And the same thing is for Nifty Small Cap also, 0.5% down. The market breadth is also not in a very positive territory. NSE decline, we can see almost 1,042 advances and 1624 decline. So it's a very lower trading day, but then we still have a lot of stock specific action going on, a lot of news specific action going on, which Ankur will be discussing up in the show as well.
Yes, definitely. But one good thing about market currently is Nifty is not breaching 25,400 mark, and that is continuing. To discuss markets in more clarity, I have with me Rajesh Bhosale, technical analyst, Angel One. Mr. Rajesh, I want to understand from you, how do you see markets currently? 25,400 not breached yet, but yet lackluster market?
Yeah, hi, good afternoon. So if you see, since last week, market has been in a consolidation phase, but overall trend remains positive. It seems that traders are a bit cautious with the Trump trade policy and ahead of few key results that have been aligned this week. So overall, bias is positive, but we are seeing some consolidation. On the lower side, if we see somewhere around 25,300 to 25,400 is a strong base. And on the higher side, if we see intraday, 25,500 is a resistance. Once that is taken out, we can expect the positive momentum to continue. So yes, bias remains positive. Similarly, for the Bank Nifty, if we see, it's holding on to its key support of 20-day exponential moving average. So 56,800 to 56,700 is a strong support. And on the high side, 56,200 to 57,300 is the resistance. So overall, bias is positive. Buy on dip would be the strategy that we would be focusing on.
Rajesh will be coming back on that as well because we really want to know your picks. But having said that, let's just focus on the FMCG pack, which is in news today, and obviously the positive Q1 updates that we've got. In fact, it's mixed for a lot of players, but then, Godrej Consumer is seeing a single-digit volume and value growth. Few segments that are doing well, that could do well, could be home care, which is gaining momentum. Jubilant Food, post 17% jump in consolidated revenue. So it's a mixed bag. But then, as we were discussing, I know it's a technical view that you will be giving up us, but then, in the second half of this calendar year, we expect this particular theme to catch on. Now, if someone wants to play this particular theme and looking at this kind of an update, is there any recommendation?
So, Kavita ji, overall, the FMCG has been out of limelight since last few months. But today, if we see, there are positive traction in the frontline counters, HUL, Dabur, ITC, So we expect the kind of chart structure we are seeing, that the bottom out has been done, and in the next few months this space that was in sluggish phase is likely to perform. So yes, bias is positive, but one has to be very selective. We don't expect broad-based buying, but selective space can give strong performance from here onwards.
Right. I also want to ask you that in the current market, what will be your stock specific picks which one could pencil in?
So as just we highlighted the FMCG space, one counter that we are liking is Marico. So Marico has been already in a strong uptrend, continuously moving in a higher top, higher bottom structure. Last Friday, we saw bullish breakaway gap, and that gap has been sustained. On the daily chart, we are seeing a cup and handle formation. So Marico looks interesting from next couple of trading sessions point of view. With a stop loss of 717, we expect a target of 775 in the near term.
Rajesh, so is that all? Only one pick? I think you have one more.
Yeah,
Sure.
so another stock pick is L&T Finance. So L&T Finance, if we see, it has already given a long-term bullish breakout, and now after that breakout, after a long consolidation breakout, any dip is getting bought into. Now the recent swing high also has been taken away, and we can see a flag pattern breakout on the daily chart. So with a stop loss of 203, L&T Finance look positive for the near-term targets of 220.
The target is 775, stop loss should be 717, and L&T Finance target 220, and the stop loss is 203. Thank you so much, Rajesh, for taking time out and helping our viewers with your picks today.